Hey everybody, welcome back to the channel. Today I want to go over the London Silver Bullet on Thursday, October 26th, and also the market maker buy model that ensued thereafter. So we are actually starting halfway through into the London session, okay, the Silver Bullet hour. We're just over 30%, or half of it actually. And why am I starting there? Well, because when you turn on the Silver Bullet Pro and you click on the Asian range here, you're going to see that the Asian range is somewhere up here, I believe. Yeah, right here. We just take that out, and then we also take this low out as well. So now we're looking for a reversal, right? And in here you can say, hey, what about this? Did you come in here? No, no. I'm still looking at higher time frame because I'm also looking at the 1 hour. Okay, it's actually the low of right in here was the low on the 1 hour chart of May 31st. And so it took out a low here, and we want to see if we're going to reverse. And we're going to look at our market structure shift here. Okay, so let's just keep playing this out candle by candle here. All right, so there's a market structure shift. Here's a fair value gap here. There's also a fair value gap right here. Mark that out, it's fair value gap as well. Okay, now that is our low risk buy right there. Put that in as our low risk buy position. Would have been there. Let's buy one, even though it's up here. I know someone's going to say like, hey, wait a minute, that's in a premium and you're buying. Yep, I am. Yep, absolutely I am. My stop is here. You can actually raise your stop down to below the low within my 5 handles, so I'm fine with it. Why am I not waiting to go into the second one? Well, it didn't go into the second one. So ICT even says if there's 2 stacked PD arrays, you can get in the first. Your stop has to go below the first, the first one. Well, the stop should have been below this one right here. Well, I can put my stop below here, and I'm still under 5 handles. 4.5, and I'm 1 tick below that. So I'll leave it right there. That's fine. We'll leave it right there. So yes, it's in a premium, and for those watching, premium and discount are preferred, of course, but it's not a requirement. All right. If you really want to be technical about it, you can also call this a breaker block, which is what this is right here. You can see that's a breaker block as well here, and if you want to just use the body, it goes right to the top, so let's just use the whole candle there. There's a breaker block as well. Okay, so I've back tested breakers enough that I trust them. I don't care if it's in premium or discount, but that's just me. You need a back test and get your own version of what you're comfortable with. I'm comfortable with that. All right, so we have our low risk buy there. I can actually lower this right here. Okay, so we've bought one there. Now let's keep going. That's our, and where are we aiming for? Well, why am I aiming up here? Let's pull our fib from low to high, the manipulation leg right there, and 2.5 standard deviations right here, just under. Right, somewhere in there is what you really want to aim for. That's considered very good market maker model. If it trades above the 2.5, then we'll be looking for the 4, but this is where it likes to consolidate and sometimes retrace. So I'm looking for my target ideally in between 2 to 2.5, especially for ES. All right, so let's just keep going here. Alright, there's one there. Looking good so far. I'd like to see a pullback for a second entry, of course. That's good, that's better. Fair value gap right there. Why am I not taking that? Well, I'm looking for a turtle soup entry, which is basically a run on stops. And so that's, you know, relatively equal lows right there. So it comes in there. Let's also throw on, there's a inversion fair value gap here. There's also an inversion fair value gap right here as well. But I want to see this run on stops first. So that's what I'm looking for to confirm my market maker model. Right there. Okay, I'll buy another one right there. That ran those stops. I'll call that the turtle soup run on stops. Buy 2 there. I'll put my long position again, aiming for 2.5 standard deviations. Okay, that's what we're targeting here. I can bring this in. I don't know why it's because of that right there. Okay, so let's keep going. Okay, so let me just show you this right here. Let's just move this right here. So that's right. The line is right at two, right? And so anything between 2 and 2.5, this could technically be done. And so this could retrace and stop. I'm still looking for the silver bullet entry, is what I'm looking for. And I'm looking for like an order block, something like that. Or maybe run on stops, something for that. And actually, long-term low, short-term high, intermediate-term low, and highs, things like that is what I'm looking for. I'm just putting that there just to show you that, you know, you may have wanted to take a partial or take your trade off there and aim for that, and you still would have done a very good job. Hit the 2 and now it's retracing, so that's wonderful. All right, that here there is another off the same respecting this. Let's see if it respects it. And it does right there, it does. Let's move this over here. I have more room. High resistance liquidity run right here. And you see what's happening here. I just want to show you. This is why this doesn't bother me, because I just know that when I look at this, I look at here to here, you've got failure swings right here. Actually, just mark these all failure swings right here. I think I have that on here. Maybe I don't. Failure swings right there. Okay. But then you also have failure swings right here. You know, like right here. I better not from that far. There's failure swings there as well. right there, right? So we've got this little wedge going on. It's gonna probably take out high and take out low and then go higher, but it's gonna go lower to go higher or higher to go lower. Okay, so that's kind of what I'm looking at right there as I'm analyzing this. I'm still waiting for, so I'm not taking a, hey, why don't you go off this order block here? Well, because we have that liquidity there, but now we have failure swings over here. I kind of want to see liquidity be taken here to see where it's going to go. Would not be surprised if it takes this out, but it should go to the 2.5. So if it just takes this out and comes down, I would be looking still to go long. Ideally, that's what I'm looking for. Here we go. Maybe it's taking these out now. Remember that took it out. Okay, that took out these failure swings right here. Because you could take this over straight across. It took those out, right? Just take that off. So easy liquidity, got some liquidity, but stopped there, right? It stopped, it's still short of the 2.5 deviations there. So now let's see if it's going to come back down. Let's mark off some things here. So we have an order block here, this one, order block. Also have an order block here, which is these are being respected. But I would obviously like to have them take out these failure swings, not leave any liquidity left behind, and then go up. So it's kind of what I'm looking for here. Here we go. I'll buy one there as my, see, it took out these failure swings, obviously. Took those out. Okay, that's how liquidity gets swept. All right, so that is your, we're going to call that the OG silver bullet. We're going to buy, and I'll put a long position here, just right up here. Granted, we just came back down, right? So we'll see if it goes back up. Got to go up to go down to go back up, right? That's kind of what we're doing here. Building liquidity up here, building liquidity down here. So now it's taking it, and now it's going the opposite direction, which is great. All right, flatten there. Okay. Okay, there you go. Let's just add a couple more here. And now we consolidate. All right. I'll show you how we consolidate for a little bit here. Okay. See, 10-15 minutes consolidation. All right, so let's take the positions off here and let's look at what happened. All right, well, we took out liquidity down here. We took out a 1 hour old low, as well as taking the Asia low here. And we took out the current daily low here as well. So then we waited for a market structure shift. Market structure shifted and then gave us our 2022 mentorship model, which is the low risk buy. And that was this was a breaker block, right? A low, a high, a lower low, braked through, came back in. So our low risk buy wasn't just a breaker block, it was off a fair value gap. Was it in a premium? Yes, it was in a premium. However, I've backtested enough for the breaker block, I trust it. So breaker block for me supersedes the premium and discount range. I have, obviously it's preferred, but it's not a requirement. So I got in there, low risk buy, price traded up. We did pull our fib from the low to the high of the market structure shift, the manipulation leg here. We got 2 to 2.5 deviations. Let me take this line off. Okay, and so then as we're coming up, we started saying, hey, here's an inversion for a value gap. Here's an inversion for a value gap. I'm looking now for a market maker buy model. We have our low risk buy, then we have our run on stops, basically a turtle soup entry, which is the first stage of accumulation. So I'm looking for, hey, we have relatively equal lows in the middle of an inversion for a value gap, and a second inversion for a value gap. Great entries right there. So we took a trade when it came down in that. ran the sell stops. We took our entry. Our stop was, below this one. There's 4 or 5 handles total. And we still targeted the 2.5. We came up, and at 2 standard deviations, it just kind of flatlined here. It did some failure swings here on the buy side, made some failure swings on the sell side. So now when it left this, we had all this liquidity built up right here, and all this liquidity built up over here. So it ran the liquidity up here to immediately come down. And what did it do? It took out this liquidity, and as soon as it hit that liquidity, hit that order block, then it spiked up. It just, not spiked up, but it rallied higher and stopped about 2.5 deviations. Put this on here right here, 2.5. There's your 2.5 deviations. So that is your market maker model and your silver bullet entry for London session for Thursday, October 26th.